And so switching gears to talk about multifamily, both on the development side and the existing side, how are you guys thinking about this crazy market that we have with the numbers just not penciling out? I'm getting a lot of calls from condo guys saying, okay, I want to convert to multifamily. Or, in some cases, I am worried that my buyers are not going to close. Like looking at if they qualify today versus 2020, it just might not work. So like, where do you see opportunities in that? Like, how do you see that whole thing shaking out over the next couple of years?
I think there's a lot. Again, it's
multifamily, not the same as development, obviously, but
let's loop it all in. Let's just what we're really talking about is how the residential market evolves from where we are today, which is effectively we have a non-existent residential for sale residential market, whether it's low rise or high rise. Nothing's getting launched, nothing's getting built, and that's an issue. Now, it was a bigger issue when population growth was on steroids. Today, population growth, and certainly for the next couple of years, my expectation is, at least based on what our politicians are saying, is that immigration and population growth is going to slow dramatically.
Right.
So I think that does change the calculus a little bit. But we are underserved. We are undersupplied currently. There is lots of supply coming that is either arrived over the last 6 months or will arrive over the next 18 to 24 months. We're going to have to get through that period of time, and that supply is going to have to get mopped up, and that's going to take some time.
Yeah.
And until that happens, I suspect you're not going to see a very strong rebound, particularly in the high-rise residential market for sale. As these units come on stream, and a lot of them are being rented, not lived in by users or owners, but by renters. You're going to see some moderation in the rental market, and we're already seeing that. I mean, we're already seeing market rents for the new stuff come down a little bit. Condo rents are down a little bit. Market rents for the older product, at least in our own portfolio, growth is slowing. They're still growing, but they're slowing. So, if you take an old, what I'd call a vintage residential building, and you got a person in there who's paying $1,600 a month, market rent, if that person were to leave and come back and you do paint and carpet, whatever, that unit would go for, I'm making these numbers up, but $2,300 a month. Next year it might be $2,350 a month, not $2,450 a month. Right. So those rents are growing, but at a much slower pace. The condo supply, the brand new condo supply, or even to some extent the rental, the purpose-built rental product that's being built and delivered, those rents are actually modestly, but they're falling. So whereas you might have penciled out by the time a building gets out of the ground and open for business, whereas you might have penciled for a one-bedroom unit, it was $2,800 a month or $3,200 a month. Those rents are actually in some cases not hitting those marks, and they're actually lower than people thought. So that's there's a little bit of a dichotomy. There's a little bit of divergence between how the old vintage buildings are doing versus the new buildings.
Yeah.
And I think we're going to continue to muddle along a little bit in residential until the supply is mopped up, and that's going to take a little bit of time. You talk to condo brokers, which I have, and like the unit brokers, residential agents, and they'll tell you that today, they can find you units in buildings that are standing. So standing inventory that has never been lived in, that either inventory that the landlord still hasn't sold, or inventory that has been purchased by somebody who's now either trying to assign the deal or flipping the unit. And in buildings that were achieving $1,600, $1,700 a foot, 24 months ago, they can find you units for $1,000 a foot. Like huge discounts.
Have you heard of people in the market creating funds just to go after that specifically?
Yeah, funds might be a too strong a word, but for sure there are people, at least private investors that I've heard, that were putting what I would call pools of capital together to go and try to buy inventory at scale at a discount and then rent them out. I don't have clarity really as to how those are performing. I think it's an interesting business model. I think for us, it's tough to scale that to a point where it makes sense for us to do. But I think it could be an opportunity. It could be an opportunity. I think you have to be careful. When you're buying the condos, to me, there's good condos and bad condos. We sort of talk about condos like all in one as though they're a monolithic, asset class. And I think there's good condos and bad condos. I think there's buildings that will age well. There's buildings that will age very, very poorly. There are units that work. There are units that are pretty funky, right? Like you walk into some units and there's columns in the weird places, or the bedroom's over here and the washroom's over there. And when it's one thing to sell a unit off of a plan and then rent it to someone who's going to live there for 6 months or 8 months or a year,
or not live there at all,
or not live there at all. But it's a different thing to have a standing unit existing that someone can walk through and think to themselves, can I live here? Like, is this, can I live here like permanently?
It feels small.
It feels small, or how, like if I have a friend waiting for me in the living room while I'm getting ready, like how do I get from the washroom back to my bedroom? Like, it's little things like that, right? Yeah. That on plans, when the investor's either not in the city that the building's in, could not even be in the country that the building's in, and they're looking at it online or on a schematic, you sort of say like, I don't know how close attention they pay to those details. It's different when the standing unit is right in front of you and you're able to walk through it and live it and breathe it for a few moments before you make the decision whether to buy it or rent it or not.
Have you heard of, somebody mentioned this idea to me the other day. Have you heard of groups doing kind of like preferred equity infusions, so that somebody who was a condo builder and now they're not following through with their pre-sales, just to give them that equity bump so they can leverage the rest of it? And then like maybe they have a preferred equity option to buy the completed building back from the builder at like a 5% discount.
I haven't really heard much of that. I mean, we have a relatively sizable mortgage book out, construction mortgage book out to a series of condo developers, and some have gone well, some have gone less well. The ones that have gone less well, we generally have an exit strategy for, and we're executing on that. What we have not seen yet, despite your assertion at the onset of the question, we have not seen large amounts of buyers walking away. I mean, that's not something we have seen really anywhere. I mean, there's been a project here or there where some buyers have fallen away, but by and large, across the board, the buyers are closing, and the ones that don't qualify, so to speak, are figuring out how to get it done.
Right.
Or they're flipping the paper, at a discount, and the new buyers figuring out how to get it done. So, we have not seen that yet. There are some cases where developers have failed. Yeah. That's probably more common. The most common default in our mortgage book of all the problem loans that we have in our mortgage book, and there's not that many, there's a handful, but there's not that many. But of all of them, the most common scenario is a residential developer who's long land, short balance sheet, and cash. And projects have projects have taken longer to either get out of the ground or to get zoned or to get the pre-sales done. Like, things have just dragged. The interest rate spike, in the last 24 months wasn't helpful. So they've basically burned through their interest accrual facility in 6 months when they thought it was going to take them 24 months. And there you are, basically with a massive cost overrun. So you have to either fund it with equity, and a lot of these guys don't have the cash to do that. And so we find ourselves in a position where we have to either work with the developer to get it built, or we have to basically take the project back ourselves. We hand it to our development team, and in a few cases, we're actually building the buildings ourselves, and we become the de facto developer.